Joining me now is Marissa Ansell. She is the head of ETF investment strategy at Goldman Sachs Asset Management. Welcome to the show.
Thanks for having me.
All right, so the Fed has been in the spotlight. They recently cut rates for the first time since last December.
Yep.
What do you think is going to happen moving forward? Do you see more rate cuts in the future?
Yes, we do. So thanks for having me on the show today. So the Fed cut rates by 25 basis points last week, very much as we had expected and as we had been guiding our clients. We do expect another couple of rate cuts coming through the end of the year, followed by another couple in the first half of next year. But what we're really focused on right now is helping our clients think through how to position their portfolios for this new environment. And I think there are a few pretty easy things that clients can do in their portfolios right now. Number one, step out of cash. So to the extent they have cash or money market holdings in their portfolios, look one step out to ultra short duration bonds. Number two, focus on income as an additional source of return for portfolios. And I think that's one of the reasons why derivative income ETFs in particular have been really popular so far this year. And number three, consider small caps. So, a couple of months ago when we were advising this would have been a little bit more of a controversial call. But actually right now, as you mentioned earlier, small caps have outperformed large caps just this quarter by more than 500 basis points. And we think that the setup for small caps is pretty nice from here.
And we'll definitely touch more on ETFs and small caps in the interview. But first, you mentioned next year. Looking forward to 2026, what do you see the Fed doing?
So our base case expectations are for a further two rate cuts in the first half of 2026.
All right. And how can investors position themselves ahead of additional rate cuts?
Yeah, so I think one thing that they can do, as I mentioned, is very simply step out of cash. There's $7.3 trillion still sitting in cash and money market funds, and just going one step out into ultra short duration bonds, products like GSST, so that's our ultra short duration bond ETF, or GUMI, our ultra short municipal income ETF, I think allows investors to pick up a little bit more yield, lock that in, without taking significantly more risk.
And what should investors know about these yields that might be overlooked?
Yeah, I think, now that the Fed has started cutting rates, of course, that's starting to put pressure on traditional fixed, yields in traditional fixed income. So I think one thing that investors can do is look to the equity market. And derivative income ETFs can be a really good source of income that's not tied to falling rates, importantly, and getting that through the equity market. So derivative income ETFs where you have equity exposure, but you have a call option writing overlay, which putting that together, it gives clients, lower volatility equity exposure. So that's pretty nice for the current environment. But at the same time, they can deliver a nice, high, consistent source of monthly income. And so, GPIX, GPIQ, which are our premium income ETFs, have been really popular with investors for those reasons.
And can you talk more about the derivative ETF market and why investors are looking there right now?
Yeah, so so far year to date, we've seen $44 billion pour into the derivative income ETF category. It's actually been the biggest flow gainer if you look at all the Morningstar active ETF categories. And I think it's for those reasons, because they help investors solve a couple of challenges. They allow investors to keep their equity exposure, right, which is most investors do want to stay invested in the equity markets. But at the same time, they do it in a lower volatility way, and they provide that nice source of regular cash flow.
And earlier you mentioned the Russell 2000 at record numbers right now.
Yeah.
Do you think investors should be looking at small caps? Do you think they're being overlooked?
Yes. So we do think investors should look at small caps. We do think that they've been a little bit overlooked. I think small caps have been playing, a little bit of a waiting game this year so far, waiting for the Fed to start cutting rates. And of course, now that has started. So that's a really nice setup for the asset class. But in addition, there are three reasons why we think the setup for small caps is really attractive from here. So number one, fundamentals are actually really solid, right? So small caps are expected to grow their earnings at 30% next year, vis-a-vis 10% for large caps. Number two, M&A volume and IPOs have picked up in a pretty big way. So M&A volume is up 30% versus the same period last year, and the number of IPOs is up more than 50% year on year. So that's a really nice tailwind, nice catalyst for the asset class. And number three, which is sort of the real kicker, valuations are still really, really attractive. So your median small cap stock is trading at more than a 25% discount to large cap relative to a historic average of about 3%. And so putting all that together, a fund like GSC, which is our small cap equity ETF, is a really simple way for clients to start to put capital to work in the small cap asset class.
And besides these small caps, is there anything else that you're following that you think might be a little bit under the radar right now that might make a splash in the future?
Yeah, it's a good question. One area that actually we've seen a lot of interest in this year, well, I'll give you a couple. One is international markets. And so we've seen a big pickup in interest in international equities so far this year. Actually, GSIE is our international active beta ETF. It's a quantitative factor-based ETF. That's been really, really popular and seen a lot of flows. And number two, gold. Gold has actually been really, really popular this year. So AAAU, which is our gold ETF, has again had a lot of inflows from clients looking to, I think, put some diversification in their portfolios and sort of add a little bit of ballast.
All right, Marissa Ansel, head of ETF investment strategy at Goldman Sachs Asset Management. Thank you so much for joining us.
Thank you so much for having me.